Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Chip stocks drive Asia higher as blockbuster earnings from Coreweave and Supermicro Computer fuel the AI trade. Oil climbs for a sixth day, set for its longest winning streak since April, as traders remain uncertain on the prospects of a deal on the Strait of Hormuz. Plus, US inflation in focus. Traders say it's 50-50 on a September Fed hike. We'll preview today's crucial CPI print. Well, a very good morning. Here's the picture in markets this Wednesday as we build up to that US inflation data. Oil, as I say, gaining for the sixth straight day on skepticism about prospects of a Middle East deal, despite President Trump saying that the US totally controls the Strait of Hormuz. So Brent trading at 89.43, the barrel up 0.6%. Treasury's pretty steady now, the 10-year down a basis point at 4.68%, but we saw gains of 2 to 3 basis points across the curve yesterday after that well-received Treasury auction. The dollar consolidating somewhat, near a 2-month low now, having fallen to its lowest level since May on Friday. Traders focused on that CPI print out of the United States later, pricing just under a 50-50 chance of a September hike. And flipping over to the stocks and futures picture, the mood is buoyant, at least for tech. South Korea's benchmark Kospi index up 3.8% now, pairing earlier gains, but boosted by those results from Coreweave and Supermicro Computer, both rallying after hours, and that lifting Nasdaq futures as well, up 0.3%. But Europe somewhat held back, flat to the downside. Of course, we have lower exposure to tech here in Europe. Now, let's turn to the risk events on the docket for today. The biggest show in town is, of course, that US inflation data for July. It lands at 1:30 p.m. London time. At a core level, our economists say CPI could fall to its lowest since March 2021, so potentially challenging the view of the Fed's hawks that immediate policy tightening is needed. Then, of course, at the root of the inflation story right now is the oil price, and we'll get the latest oil market reports from the IEA and OPEC later on. Plus, we'll have tech earnings from Honhai, Tencent and Cerebras, a read on AI demand and capex. So, plenty ahead. Let's get started. We begin with tech leading a rebound in Asian stocks this morning. Let's go straight to Winnie Xu in Hong Kong. Winnie, what are you watching?
Yeah, good morning, Lizzie. Well, a pretty positive session here in Asia, supported by those solid earnings from the likes of Coreweave. Now, you can see that Kospi here really leading gains up almost 4%, and that is also coming after Samsung and SK Hynix driving gains of about 5%. Now, we have learned that investors are really now shifting their focus away from debating on where we are with this memory cycle, but also focusing more on the potential cash returns from these two companies. And for now, we are expecting massive shareholder return plans to be announced by the two companies as early as later this month. Now, with that, there was also another local report pointing to Singapore state fund Temasek to invest in the two stocks, and optimism around how these long-term investors are now starting to see some attractiveness in the Korean market. Now, flip the board, we take a look at the other side of things. The weakness is really coming through in the tech stocks in Hong Kong. You can see HS Tech and Hang Seng Index here, both down more than 1%, dragged by the internet names, including Tencent, which will be reporting its earnings later today. Now, with Tencent's earnings later today, we are kicking start that rest of the earnings for the Chinese internet sector. And the focus will a lot be on how these capex spending and of these Chinese hyperscalers will be able to be offset by some of the monetization plans that they have for its AI progress. Now, JD.com also reporting earnings tomorrow, so we'll keep a very close eye on that. Flip the board, we also take a look at how Japanese assets are doing, because Japan coming back from a holiday with the Topix index here also gaining, with gains being led by the banks as we continue to bet that the Bank of Japan will likely have to raise rates earlier given the weakness in the Japanese yen. And speaking of that, we are seeing the yen here trading just below that 160 level against the dollar. Investors are saying that we most likely will see higher risk of intervention coming back a alive again if we cross that level as well. When it comes to yield space, seeing a bit of a tick up higher, driven by the concerns around higher oil prices, raising some worries around inflationary concerns. Back to you, Lizzie.
Winnie, thank you very much. That's Bloomberg's Winnie Su, and we will be diving into those results from that we're expecting later out of Asia, the tech earnings later on in the programme. But first, let's turn to the US tech earnings that we've already had. Part of this morning's sentiment boost, of course, coming from Coreweave and Supermicro shares soaring after hours after both companies delivered strong results and outlooks. Let's get more now with Neil Campling, our senior strategist here at Bloomberg. So Neil, why are these results such a bellwether for AI demand?
Yeah, I think if we take Coreweave in particular, it's known as what's known as a neo cloud. What that means is it's providing raw compute power for AI specifically. So when they announce that they've got a backlog of 500 megawatts signed up in that quarter, that's more than all of the other neoclouds' capacity put together. So it's a big number. Revenues grew triple digits year on year. So it's a sign really that the AI demand is alive and well. And if you look at their customers, 80% of their own revenues is coming from 3 hyperscalers. They're coming from Meta, from Microsoft, and from Alphabet, Google. So it's reflective of that primarily.
And when it comes to CapEx, we've got NVIDIA set to receive funding help from 6 of Wall Street's biggest names. We talked about this yesterday. But what we've seen since is that it seems to have soothed the credit markets. So is it because it underscores the message that AI CapEx is acceptable to markets as long as it's not circular funding? Or should we actually be a bit more wary here and see this as a shift of where the risk goes, potentially to different losers if the bubble bursts?
Potentially. I mean, I think what it is the circular financing questions have been of big concern. NVIDIA has been backstopping, if you like, big investment from a SoftBank-led data center. OpenAI as well. So what this is it is spreading the risk, as you say. And then those private equity firms involved in this deal as well, they're spreading the risk further because they're bringing on third-party capital and third-party investors. So at least that way, it's not all sort of concentrated in 1 or 2 companies, but you're spreading the risk that way. So it's taking relief from that. But on the other side, it probably won't dampen all of the concerns because we're still waiting to see when the returns on invested capital actually come through in AI. And that obviously is going to take some time, because it's a long time to build out. Yeah,
if anything, you're just bringing even more players into the web, and some of those are pension funds, right?
True.
Neil, thank you very much. That's Bloomberg's Neil Campling. Now, turning to the macro, the data highlight of the week, July's CPI print from the United States, expected to show annualized inflation ticking lower. Economists expecting the headline figure of 3.4% on the year, and Bloomberg Intelligence saying that the reading could produce the softest core inflation print since March 2021. Now, the data comes with markets split almost evenly on whether the Fed will hike at its next meeting. So let's bring in Ben Ram, cross-asset strategist for Bloomberg MLive, for more. Ben, what sort of market reaction are you expecting from the data today?
Morning, Lizzie. I think that the market reaction may surprisingly be asymmetric, meaning if the data prints on the softer side, I think there's greater incentive for, there are huge short leverage positions built into the market going into this. So which means that investors are very bearish on treasuries, especially on the duration side of things. So if the data prints on the softer side, there'll be an incentive for them to cut those shorts and take profit. So I think that, that reaction will be asymmetric. More than if there is a beat to the higher side, I think that because yields have already run up 25 basis points this quarter, that's quite considerable. So I think that increasingly it is looking like, we may get treasuries, a small tactical rally in treasuries after the data.
But what's interesting is your team argues this morning that fiscal discipline matters more than CPI. Why?
Well, obviously, investors have been long concerned about fiscal profligacy in many of the markets, in several markets, the US, Japan, and UK in particular. And the US hasn't done anything to alleviate those concerns. So we have seen these episodic outbursts where the markets come to gloom and kind of push yields higher to see what the Fed and policymakers have to show in terms of containing inflation, in terms of containing the deficit parameters, but we haven't seen action on either front really. And so this begs the question, how long is this going to continue? As I said, the shorts may take profit today, but beyond the short term, if you look at the picture of duration, it's not very constructive. And I think that we are going to see these episodic bursts of higher yields, and that is going to keep yields at the stretched to the multi-year highs. We are already at the highest, near the highest since 2008 on the 30-year, and I think that is going to be symptomatic of what is to come in the coming months.
And Ben, as we say, it's about 50-50 when it comes to a September Fed hike right now. Where do you stand?
I think it's much less than 50%, if I'm being honest, because look, this is a Fed that has tolerated an inflation overshoot for 5 years now, and they haven't been compelled to raise rates. And we got the last week's jobs data, which is very soft, showing a contraction, a 2-month revision downward. So I think that, the Fed is going to think, what, is there a soft patch in the labor market? And if so, how significant it is? So that means essentially that they want to buy time, which means that they are not going to raise rates in September.
Okay, Ben, let's see where we are after this print. Ben Ram from Bloomberg M Live. Well, still ahead, a fresh test of direction for US politics as voters head to the polls in the latest midterm primaries. We'll have more on those results. But first, oil prices continue to march higher amid Middle East uncertainty. We'll get you the latest from the region next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, oil prices are climbing for the 6th day today on continued scepticism about a prospect for a deal to restore energy flows through the Strait of Hormuz. Now, it comes as Pakistan's defense minister says that the US and Iran are close to reaching a deal regarding that critical waterway, despite both sides toughening their stances.
I don't trust Iran. Why? Are you saying I trust Iran? I'm the last person to trust Iran. They've lied to me constantly. We have total control over the Hormuz Strait right now. They don't have control. We have total control. We own it. And at some point, maybe they'll do something and then they get blown away.
Total control. Well, let's get the latest from Bloomberg Horizon's Middle East and Africa anchor Abir Abu Omar. She joins us from the region. Abir, plenty of mixed signals once again. Where do we stand this morning? Good morning.
Good morning, Lizzie. Well, back and forth again. You just heard the president saying that the U.S. has total control over the Strait of Hormuz. Now, that is something that the physicality of those oil barrels stuck in the Strait of Hormuz refute, but also the Iranian side refutes vehemently, actually. Iran maintains that it asserts dominance over the Strait of Hormuz. As a matter of fact, that is the premises of the agreement that is taking place with Oman over the past, or has been taking place with Oman over the past 10 days or so, to establish some kind of mechanism to restart movement through the Strait of Hormuz. We've reported multiple times over the past 5 or 6 days, Lizzie, that agreement is in the final stages. The latest we know from Al Jazeera saying that agreement is in advanced stages, but we don't have a clarity on what exactly it will entail for those barrels that are stuck in the waterway. President Trump, after yesterday's remarks when he said that he will demand compensation from Iran in any further negotiations for the thousands of people killed over the past 50 years, he also said that Iran takes accountability for the tragedies that had occurred in neighboring countries, including in Yemen, Syria, Lebanon, and in Gaza as well, of course, without giving any clarification. And then the latest from what you just heard him saying, the U.S. asserts full dominance over the Strait of Hormuz. That's not entirely true, because we know that the U.S. naval blockade is in place. We know that Central Command, in the early hours of the morning, we heard them saying that they attacked a Panama flag flagged ship that had gone through a route that was not the right route according to the US side. We know that ships that go through routes that are not classified as the right path according to Iran are also prone to getting attacked. So you're getting ultimately a situation in the Strait of Hormuz that's similar to what has been the case over the past 6 months or so, and that is paralyzed movement, ships that are deciding to go through or going through with their lights switched off, but that trickle of movement is nowhere near where it was pre-war. And then we obviously continue to monitor those developments in the negotiations with Oman. Pakistan, which is a key mediator in this, through the defense minister Khawaja Asif, said yesterday to reporters that a path towards peace, and I paraphrase here, that a path towards peace is possible and that there are signs of positivity behind closed doors. But for the time being, we go with what we see, and what we see on the ground is that Brent crude prices have touched $90 on the barrel, are edging very close to that level as of now, and that is what it means for oil markets and those energy flows that are trying desperately to make their way across to the globe.
Well, later on in the programme, Abir, we're going to be talking about what's going on at the top of Iranian domestic politics and the impact of that on public life. But can I also just ask you about the tensions elsewhere in the Middle East region? What are we seeing?
Yeah, so that is a widening of the parameters of the war, because when this whole thing started in late February, Lizzie, it was US, Israel attacks against Iran. And while, of course, they were significant and dragged down countries in the GCC, what you're now seeing is other proxies in the region backed by Iran hitting countries in the region. That was not the case in the beginning. So now you're seeing the Yemen-based Houthis attacking Saudi Arabia. Saudi Arabia had stayed away from the majority of this conflict at the beginning. Of course, its oil exports had managed to go through the Red Sea, Bab el-Mandab, that is another crucial waterway here in the Middle East. But over the past few weeks, what we've seen is that the Yemen-based Houthis have started to accelerate their attacks there. Over the past weekend, they hit an Aramco facility, as they claim. We didn't have a confirmation from the Saudi side. What we heard from Aramco and the Saudi government is that there was indeed a fire at that oil facility, Aramco oil facility or refinery in Jazan, and that the fire was extinguished quite quickly. No injuries, no fatalities there. But still, that would have been the second such attack if it was verified in a month. And so you're seeing the widening of the perimeter. Iraq-based militia in the southern part of the country have also attacked Saudi Arabia in recent weeks, with a response from Saudi Arabia on Iraq that killed multiple people as well, US and Saudi Arabia, should I say. And so you're seeing a widening in the parameters again. You're seeing other countries get involved. And so while we keep an eye on a return to diplomacy in all the mediators, including Qatar and Pakistan, the situation on the ground right now is that of an escalation that is having its impact on energy prices and wider crude products, of course.
Abir, thank you so much for the update. That's Bloomberg's Abir Abu Omar out of Dubai, and she'll be back with Horizons at 5 a.m. London time tomorrow. Well, coming up, a big drop in Russian overseas crude shipments as Ukraine steps up attacks on oil infrastructure. We'll turn to that conflict next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Just coming up to 6:23 a.m. here in London. Now, Russia's overseas crude shipments have dropped to the lowest since May, with key ports in the Baltic and the Black Sea operating well below capacity. Ukraine has resumed near-daily attacks on Russia's oil processing industry following a lull last month, with the governor of the Krasnodar region reporting several hundred drones striking the crucial export hub overnight. Let's bring in Bloomberg's team leader for Russia, Anthony Halpin, now. Anthony, good morning to you. Just talk to us about how Ukraine's attacks on Russia are managing to be so successful on the oil industry right now.
Yes, good morning. Well, Ukraine has for some time been targeting oil refineries and other infrastructure related, particularly to Russia's exports of crude, as you noted, ports, and even now today, the port area around Novorossiysk in Krasnodar has been under attack. And it's had the big effect of reducing processing volumes for Russia domestically, which has led to fuel shortages for many areas, and people are again beginning to complain about that. And also a reduction in export volumes, and the whole intention is to try to reduce the volume of revenue that the Kremlin has available for its war machine. And it is clearly having an impact on the bottom line. I mean, Russia's budget reported a widening of its deficit yesterday in July, despite the fact that it's getting more money because of crude prices going up as a result of what's going on in the Middle East. So Russia's spending more, it's getting less, and that's having a big impact. And domestically, it's a problem for President Putin because he has elections coming up in September, and the last thing the Kremlin really wants is images of lines of Russians lining up outside petrol stations, waiting for hours to fill up their cars.
And Tony, as a mark of just how severe the shortages Ukraine's inflicting on Russia, we're seeing Moscow having to rely on India for gasoline. How significant is that? And is it something that you see as a potentially long-term trend?
Yes, it's interesting. It's the first time this happened. I mean, India, since the war in Ukraine began, has been a massive importer of Russian crude to service its own needs for fuel. But now it seems the flows are going the other way, and it's started to send fuel to Russia because Russia needs domestically more supply to, as I've said, reduce the impact of fuel shortages on its own citizens, because the Kremlin is clearly very worried that this will have an impact on Putin's popularity and their willingness to continue supporting the war, if not passively. And as a result of that, this may happen more and more with other countries. There are countries like Kazakhstan, for example, where Russia could turn for more processed volumes of fuel if those fuel shortages domestically grow worse.
And the other development here is the Kremlin seems pretty confident of a deal to secure access for the military to Syrian bases and ports. You and I, Tony, have talked a lot about Russia extending its tentacles into the African continent. How much is this a step towards that, and how worried should the West be about the Russian presence in Africa?
Yes, this is a sliver of strategic good news for Vladimir Putin. They were very worried when Bashar al-Assad was overthrown in Syria that they would lose access to these bases. The port is their only Mediterranean port for the Russian Navy to have access to. And the airbase, as you said, is a critical factor in transit for goods and operations that Russia carries out with various countries in Africa, Democratic Republic of Congo, areas of the Sahel region, for example, in which Russian mercenaries have acted in the past, and now Russia's defense ministry is present, supporting countries that they view as allied and which they can influence by providing military support. Resupplying that is critical. They were worried that they were unable to do that if they couldn't keep this base in Syria. Now it seems from the Kremlin's viewpoint that an agreement with Syria means that they can continue to do that.
OK, Tony, always great to have you on the programme. Thank you very much for your time this morning. That's Bloomberg's Anthony Halpin. Now to some other stories that we're following for you around the world this morning. A drone sighting disrupted flights in the central German city of Hanover for almost 2 hours yesterday, the latest in a series of drone-related incidents that have raised questions about external threats to the country. The airport says runways were temporarily closed. And Hungary's parliament has elected former Supreme Court Justice András Baka as the country's new president, a key step in dismantling Viktor Orban's political legacy. Baka replaces Orban-appointed Tamás Sulyok, who was ousted last month. So just a couple of our stories from around the world. But coming up on the programme, results coming through in a series of key US primary elections. So we'll turn to the domestic politics stateside next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Chip stocks drive Asia higher as blockbuster earnings from Coreweave and Supermicro Computer fuel the AI trade. Oil climbs for a sixth day, set for its longest winning streak since April, as traders remain uncertain on the prospects of a deal on the Strait of Hormuz. Plus, US inflation in focus. Traders say it's 50-50 on a September rate hike, and we'll be previewing today's crucial CPI print. Well, a very good morning. If you are just joining us, 6:30 a.m. here in London. This is the picture in markets this Wednesday. Oil, as I say, gaining for a sixth day on the scepticism about prospects for a Middle East deal. Brent there at 89.36 a barrel, up 0.5%. Treasuries pretty steady. The 10-year at 4.68, down a basis point. We already saw gains of 2 to 3 basis points across the curve yesterday after that well-received Treasury auction. And the Bloomberg Dollar Spot Index flat to the upside, consolidating near a 2-month low, having fallen to its lowest since May on Friday. And now traders focused on that CPI print. The price indicates we're on a knife edge when it comes to the September Fed meeting. Now, flipping over to the equity picture, and the mood has been pretty buoyant this morning. The MSCI Asia Pacific Index up 0.7%, boosted by the Kospi up 3.7%, and tech is what's boosting things here. So we've had those results that we were discussing from Coreweave and Supermicro Computer, both rallying after hours. That partly why we have the rally in Nasdaq futures up 0.25%. But of course, Europe doesn't have so much exposure to tech, so flat to the downside for European Stocks 50 futures. Now, let's turn to our front pages this morning, kicking off with the Wall Street Journal. It leads on primary elections across the United States, which we'll dive into in just a moment, but a key Democratic race in Wisconsin looking closer than polls had suggested. Let's also have a look at the Financial Times. It reports on fees for transit through the Panama Canal hitting a record high as intensifying El Nino and Iran war-driven demand constrain traffic. And if we come to Europe, in Spain, El País is looking ahead to today's solar eclipse with a headline that begins, "The wait is over," as millions of Spaniards and tourists prepare for the country's first total eclipse in over a century. Well, you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which terminal subscribers can find by going to DAYB Go. Now, let us turn back to earnings, and specifically out of Copenhagen, we have breaking numbers from the wind turbine maker Vestas. Analysts had been expecting a strong set of results, putting the company on track to reach the upper end of its guidance, but they were thinking that maybe an upgrade would be delayed because of the geopolitical uncertainty. What you are seeing is the redhead that full-year adjusted EBIT margin was 7 to 9%. Compared to the expectation of 6 to 8%. So a bit of an uplift there. On revenue for the second quarter, 4.72 billion euros, so a beat on the estimate. And they have also said that second quarter net income was 280 million euros. So it seems a marginally stronger than expected set of results here from the wind maker. So we have seen the shares up only about 2% this year. We'll await the stock reaction at the European cash open. Now, let us return to US domestic politics. Midterm primary season continuing. Voters choosing the candidates who will be competing in November's elections. Now, the latest contests come after progressive Abdul El Sayed won the Democratic Senate primary in Michigan last week in another victory for the party's left over its more moderate wing. Let's get more now with Bloomberg's John Herskovitz. John, good morning to you. There are some really big races going on in South Carolina, Minnesota and Wisconsin. So I'm going to start with South Carolina here. Where do things stand in the election to replace Lindsey Graham, who, of course, died about a month ago?
Sure. His sister, who took over the seat for the remainder of his term, which is only a few months, she was the top vote getter in the Republican primary, Darlene Graham. But the thing is, she didn't get enough votes to win outright, so it's going to a runoff. She's going up against Congressman Ralph Norman, a prominent member of the Freedom Caucus, someone who is a political veteran, and it could be quite a tight race. It shows a few things. One, the endorsement from Trump helped, but it wasn't enough to get her over the line for an outright victory. And it also shows that Republicans have a lot of power in this state. The election, the state goes mostly for Republicans, so the win of the Republican primary should win the Senate race. The Democrats are going to put up a fight, but primary runoff is headed, the race is headed for a runoff later this month. So mixed bag for Trump. He endorsed one candidate. She didn't get enough to win outright, but another election coming in that state.
Well, in Wisconsin, it is the Democrats we're focused on. The primary for governor there garnering a lot of attention. How's it going for Francesca Hong, the Democratic socialist, who, of course, was leading the pre-election polls in what has been a crowded field?
Yeah, no, it's a real nail biter. Over 90% of the votes are counted. It's 1%. It's less than a 1 percentage point margin. Francesca Hong, the progressive Democratic Socialist, was projected to win this in a narrowly, but she's facing a really stiff challenge from Milwaukee County Executive David Crowley, who is endorsed by the outgoing governor, a bit more of a centrist, and this is a key state. Wisconsin is one of the states which helps determine the outcome of the U.S. election. It's a toss-up state. The winner of the governorship is someone who will have an important role when the presidential election comes 2 years from now. So it shows a little bit the limits of the progressive movement, especially after last week with Al-Sayed winning in Michigan, that the progressives are doing well, but it's not complete victory everywhere. So the votes are still coming in. We should know in a few hours, or maybe it could even take longer than that. But yeah, a toss up in that state, and it's really down to the wire.
And John, for any of our international audience who aren't in the weeds of in domestic US politics, who are some of the other notable names that you would pick out that we really should know about?
Yeah, there are a few which are quite interesting. Mike Lindell, I'm not sure how well he translates overseas. He's known as the My Pillow guy, the person who has been a staunch supporter of Trump. He lost in his race for the Republican in Minnesota for the Senate to a centrist. Trump endorsed him, and Lindell, as per his fashion, is questioning the validity of the race. So that's one of the races which is of interest. Also in Minnesota, one of the progressives, Peggy Flanagan, Lieutenant Governor, a progressive, won her race. So progressives did well in that one. We saw that Amy Klobuchar, former senator, is going to won the Democratic nominee for the governor in Minnesota. She's facing off against Republican Michelle Tafoya. Michelle Tafoya was an announcer for sports. She mostly did sidelines for American football. So two big names are facing off there. Also, we saw the son of the transportation secretary won his race for the Republican for a congressional seat. So the novice, using exposure of his father, did quite well there. So lots of interesting races going on. One thing is, it shows that the progressive movement is doing strong, but there are limitations. And on Trump's side, his endorsement helps, but we have seen the limitations of that as well.
John, thank you very much for the update. We appreciate your coverage. That's Bloomberg's John Herskovitz. Now, I promised we'd come back to the Middle East, and I now want to dive into Iranian domestic politics. Iran's president says that he has met with Supreme Leader Mojtaba Khamenei to discuss how to tackle worsening living standards in the Iranian country. Now, Khamenei's absence from public life has left a vacuum, with disputes between political factions becoming more and more pronounced. We can go now to our Middle East reporter, Patrick Sykes, our breaking news editor there. Patrick, just talk us through the state of relations at the top of Iranian politics between the president and the supreme leader of what we've seen of him.
Yeah, the determining factor really is that we still haven't seen Mojtaba Khamenei, the new supreme leader of Iran, in public. We've only had written messages from him or attributed to him so far, presumably because of security as the war continues. But in his absence, he being, of course, the main arbiter between the long-standing factions that have always been there in Iranian politics. In that absence, we've seen increased squabbling between the kind of two extremes within Iranian domestic politics. One, those who are firmly opposed to any kind of engagement with the US, and on the other hand, those who see it as, to some extent, necessary in order to secure kind of stability, security, and the economic situation within the country. The president, Pezeshkian, is very much of that more moderate ideological camp. He's been advocating talks to end the war, and he's received increasingly a lot of criticism from the hardliners within Iran about that position. That led to calls for him to resign, speculation that he might, but he ultimately insisted around the time of that meeting with Khamenei that he wouldn't. So he seems to be remaining in place. He seems to have patched up whatever disagreement he might have had with Khamenei, but as of now, we're seeing a kind of coalescence of that factionalism on the more hardline end of the spectrum. So the hardliners, I think, are feeling vindicated by the way that the war and the negotiations and their failure has panned out so far.
Well, Patrick, it's a fantastic piece. Really appreciate you bringing it to us. That's from Golnar Motivali and Patrick as well. Patrick, thank you so much. That's Bloomberg's Patrick Sykes. Now, coming up on Bloomberg Daybreak Europe, China's AI progress in focus, with Tencent set to report its quarterly earnings. So we'll go to Asia Tech next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, turning back to earnings, we have Tencent reporting later on today, and Bloomberg Intelligence says that the Chinese tech giant's annual earnings growth likely slowed in the second quarter because of rising AI investment costs. Let's go now to Robert Lee, our senior analyst. He joins me now. Rob, why would it be that Tencent's earnings growth would be slowing then?
Okay, well, thanks for having me on. Just for people who are less familiar with the company, this is China's largest listed technology company. It's largely domestically focused as well. So whilst it's very important within a China context, perhaps the read across to the global AI sector or the global tech sector is less significant. But having said that, it's still a very large company. And they announced in the Q4 results back in February they were going to double their AI spending. They're playing catch up on the likes of Alibaba, etc. But previously their AI strategy was more internally focused. Maybe there were some parallels there with companies like Apple. So as a result, that actually benefited them more in the past. People took that quite positively because they were looking to drive internal synergies with AI. But now in doubling their spend, that's going to be a margin drag, not just through this quarter, but through the remaining quarters of this year, at a time when monetization for AI within China remains quite challenging.
OK, so AI definitely a focus. Do you think that this is more of a driver of sentiment or profit or both?
Yeah, well, this is the thing within the China market at the moment. You name any company has got an AI strategy. Of the 20 stocks I formally cover, each one of them has a large language model. And actually, if you take a step back, there are close to, believe it or not, 1,000 large language models officially authorized and regulated at the moment within the country. So it's an incredibly crowded market, very difficult for companies to differentiate or drive a sustainable competitive edge. So I think we're at a point where companies are predominantly still focused on investment spend. They're looking at building out their user bases at a time, as I mentioned a moment ago, when monetization remains hard to come by, because the majority of AI products and tools that are on the market in China at the moment are free to access. Therefore, AI spending is depressing margins across the sector, not just Tencent. And I'd also say that rising agentic AI use is actually an additional cost headwind, because API pricing, which is how tokens are priced, is a loss-leading service in China. So again, that's an additional margin drag. So, investors are unlikely to see any sustainable return, certainly within this financial year.
So it's really helpful context where you say about how massive a player Tencent is in the market. But then the headlines seem to be grabbed right now by the startups, the likes of Jupu and Moonshot. How much can Tencent sustainably compete when you've got exciting companies like this coming up?
That's a great question. Exactly right, because they really are making the headlines and forging the boundaries of performance. And if you look at the global top 15 models at the moment, both those companies you just mentioned are ranking very highly, almost neck and neck with the likes of Anthropic and AI. And in fact, if you look at the performance premium of US models versus the Chinese, over the last 12 to 18 months, it was typically in the 10 to 15% range. But over the last 3 months, that has narrowed to around 5% based on the latest data from Moonshot Kimi. So clearly, China is making very strong progress technologically. They're narrowing the gap with the US. But again, monetization remains a massive challenge for these companies. So the small caps that you mentioned are forging the boundaries of performance. And Tencent has been caught a little bit on the hop by that. But it's not all a game over for them because Tencent happens to have small stakes in each of the companies. And I think in the long run, it is the large tech platforms like Tencent, like Alibaba and ByteDance, which are going to dominate the market here because they have both the developer resources, the financial resources to sustain the losses in the short term and ultimately to drive synergies within their own businesses. Don't forget, Tencent's got close to 1.3 billion users on its WeChat or Weixin super app. So that is a massive user base that it can tap into and use to monetize in the long run. But we're not going to see the bottom line return, certainly this year.
OK, hard to compete with that. Rob, really nice to see you, as always. Robert Lee there from Bloomberg Intelligence. Thank you. Now, staying in Asia Tech, I want to bring you one of our top interviews now. South Korea looking to deploy over $700 million of fresh capital into a new sovereign wealth fund next year. It's going to target AI and other strategic industries. And the country's Deputy Minister for Innovation and Growth told us exclusively why the government doesn't plan on investing in local tech giants Samsung and SK Hynix.
For next year, while exact details are difficult to specify, we estimate the investment amount could range from roughly 600 billion South Korean won on the lower end to over 1 trillion South Korean won on the higher end.
Korea operates multiple state investments when it comes to these innovation technology sectors. So how do you make sure that this new account doesn't overlap with other projects?
Yes, you have raised a very important question. It is true that various funds led by government agencies are currently operating, and we are actively seeking ways to differentiate from those. For example, the National Growth Fund, which has been operating and investing since last year, aims to invest around 150 trillion South Korean won. Its main focus is centered on loans or indirect investments through funds. In contrast, when we speak of this sovereign wealth fund, we plan to invest primarily with long-term patient capital and directly make equity investments rather than simple indirect investments, which differentiates it. Rather than solely focusing on differentiation, we are also actively considering co-investing together. If necessary, we use the term relay investment, where we actively consider taking over positions when major public funds seek to exit.
Does that mean that it would actually include the possibility that given the funding is going to flow into stocks initially for this entity, that you could see actually buying, say, chip makers like Samsung, SK Hynix, or contributing to projects that some of these companies are involved in?
Rather than investing in large enterprises like Samsung or SK, our interest lies in companies beyond the very early startup stage, what is typically referred to as Series B. Series B refers to companies whose business models have been somewhat validated and are at a stage ready to scale up. Among such companies, we are considering relay investments to support them when early-stage funds linked to public institutions exit. As for companies like Samsung and SK, rather than government investment, we understand that many international firms are already interested in them, and the government currently has no plans to directly invest in large conglomerates like Samsung or SK through the Sovereign Wealth Fund.
The zeitgeist in Korean tech, really fascinating conversation. That was South Korea's Deputy Minister for Innovation and Growth speaking exclusively to Bloomberg's Sherry Ann. We'll have plenty more coming up for you. A bit more of a preview of that US CPI data coming up next. This is Bloomberg.
We're staying really close in touch with governments, with the ship owners themselves, trying to understand what's happening. But ultimately, we're trying to provide capacity for them as they, try and transit the strait. At the same time, we also have insurance in Dubai and around the Middle East. So it's more than just shipping. That's where the political violence piece is becoming a product that is in big demand at the moment, as you might expect. And we're trying to lean in to help our clients that are there on the ground trying to manage it.
The American International Group AIG CEO there, speaking 2 months into the job after his company's second quarter earnings beat. Now, he talks about the geopolitics. Of course, the impact from the geopolitics on the oil price is at the heart of the CPI print that we're going to get out of the US later. 1:30 p.m. London time is when it drops. And here is how traders are positioned into it. We were talking about this earlier in the programme with Ven Ram from our MLive team. The stakes even higher given the record short bets against global bonds by trend-chasing investors as things stand. But flip the board over and you can see that traders are pricing about a 50-50 chance of a September Fed hike. Ven doubts that. Our economists at Bloomberg Economics say that the Fed could be on hold. Flip the board one more time because bringing it back to bonds, of course, the new policy of the Fed Chairman Kevin Warsh is a little more tighter-lipped, less forward guidance, doesn't want to hold the market's hand, and that has reintroduced more risk premium when it comes to assets. So the 30-year Treasury yield holding above that 5% level now for the 26th consecutive session. We haven't seen a streak like that since 2007. Well, you can get all these charts and all the charts we use on Bloomberg TV throughout the day at CHRT TV Go on your terminal. But that does it for Daybreak Europe. Coming up, we're going to get a check on Europe's energy sector with the CEO of E.ON. That'll be on the opening trade at 7:30 a.m. London time. And I shall hand over now to Skylar Montgomery, Koenig, Tom McKenzie and Guy Johnson, who'll take you all the way to the European Cash Open. Stay with us. This is Bloomberg. Good morning from London.